Hi, good evening, everyone. Welcome back to the channel. Sorry about the delays here. I had to drive quite a bit of a ways back home, but here I am nonetheless. So, what I want to do in this video, this is going to be our post-game analysis of the Jay interview. And what I want to do, I want to go over all the comments, all the questions that went unanswered, and address any concerns, any further comments, any further questions. Let's update the comments that have already come in so far. Yeah, I had to move this back a couple times. I had the ambitious goal of being home at 7:15, but I was about 3 hours off on that. So yeah, it's still on, of course. Okay, so what I want to start off by saying, I want to preface this. Jay, of all the fund managers I've talked to, Jay has been like by far the most transparent fund manager. Say what you will. I've gotten a lot of feedback since the interview that he didn't answer this, he didn't answer that. He's been extremely transparent, coming on many, many channels, doing many, many social media interviews, and he doesn't have to do this, but he does. And I've seen him. He's never refused a question. Um, the two answers he gave that have been of the most concern to the fan base. It seems like the answer that he gave on Misty. He said, "Well, if that's our example. You see, we haven't reverse split yet, and that one, who knows, could go down to $1." I know there was some people in the audience thought that was, like not a great answer. They weren't happy with it, basically, or they thought it was somehow a cop out or whatever. But that's the answer he gave. Now, what I want to do, I want to go to the video. I want to analyze comments first of all. So we got some we got some feedback in Discord, first of all, so I want to go there. Um, and I might even just do a voice chat too and let you all, if you all have, valuable contributions to make, maybe we can do some voice chat. Um, let's do this here. I'll go, but I'll mute myself. So, what I want to first go over, I want to go over one of the questions that Income Architect pointed out. So, and he thanked me, said, "Thanks for asking the question." He says he knows my wife has her Series 7, so I can see why he brought that up. I did laugh a little as she got her Series 7 before him in 95, and he indicated he got it in 1999. So, Income Architect brought up a really interesting issue about, I believe it was section 1256. So, that one definitely deserves further looking into. If you all are not in my Discord, I highly recommend that you join. I put the link in every video. Um, we just had a new person join here, K190. Okay, so cool. Welcome. So I highly recommend you all go in and look at the J thread and analyze what analyze what Income Architect was talking about that. MRNY is at 3. Jay's not planning a reverse split yet. Yeah, see, he talked about that too. Okay, let's see here. Good, we got the welcoming committee going. Just want to go in the J thread here. Let's see. He said, "Watching your interview now, my question is: the more and more funds they're running, and how are they doing quality control on the traders trades over time?" Hey, he's happy with his traders. He said he's got some real pros there, and we broke down some of the trades on the live stream. So go watch that if you haven't already. Every fund they open, they get their 1% management fee, but not every manager executes as well. Or do they have simple guidelines for all the trades they must follow? So that could be like a follow-up question. Let's see. This one came to about capital appreciation of the fund description. He had a good answer to that, I thought. And let me know in the comments right now. Let me know if you all were satisfied with his answers or if you thought there could be better responses given to some of the questions. Other than that, I highly recommend going in here and reading, especially what Income Architect had to say. It was a very interesting topic. It's one I need to wrap my head around more for sure. So let's see here. Um, let's go. It is nice. I got to tell you, it's nice when actual pros are in the finance community on YouTube. People that actually know what they're talking about and know what they're doing and have studied the subject. Uh, so 1256 contracts. This is honestly a little bit over my head what he was saying. Um, But let's see here. He posted an article, and there was another thing that came up here too that he posted, the NAV dilemma, why synthetic ETFs face zero growth potential. That's something that I highly recommend you all check out as well. If time permits, once I go through these comments, we'll go over that as well. Okay, let's see here. We've got, this is a mouthful, Westchester L. Charleston Dixon Cathcart II, which presumes there was a first. J is great, and YieldMax has a lot of great funds, which is great, but also bad because now much of my main portfolio consists of YieldMax funds. Well, that's kind of your own deal, isn't it? You bought in, didn't you? Misty, NVDY, Coney, SNOY, LFGY. Let's F and go. We picked up that. By the way, Jay said he's not part of the naming convention at all. So I found that interesting. I thought his creativity was lumped in there somewhere. YMAX, QDTY, STTY. Yeah, these intrigue me. This STTY, QDTY. We pulled up charts too and showed how those are actually overperforming. I see that as potentially bad in the event YieldMax ceases to exist. You think that might happen one day? I've been diversifying into Roundhill Curve, SCHD, etc. Are you new at investing? Because I mean, highly think you should be in all kinds of stuff. I mean, it's what I do. I mean, I'm in crypto, I'm in index funds, I'm in growth funds, I'm in individual stocks. I do a lot of options trades. So yeah, I think it's good to be in a lot of different things. Okay, let's go to the actual video now, and we're going to look at comments. So let's start here, and let's go over. Is this? Okay, so I'm going to pull up. I'm on my own YouTube channel here. Let me do a screen share. I'm going to pull up the video, and we're going to look at the comments from the last video. I'll even respond to some of them live. Do a live, right? Who said that? Okay, so let's go here. I'm going to actually pull up the video.
Who's coming in?
And I'll go ahead and like it. Okay, so we got 92 comments, so we had a high level of engagement on this one, and I love doing these because when Jay is on, these get such a high level of engagement. So we had good feedback as well. We had thank you, great interview. This person said, Jay dodged the synthetic and NAV growth question, but to be fair, it is only relevant for funds using very long expiration calls. I think, of course, about Roundhill DTEs. YieldMax funds close their synthetics much more often. Okay, so if you think he dodged it, I mean, to each their own. This one's interesting. How does Jay expect us to retire off of our YieldMax dividends? If he's saying that we should be reinvesting our dividends into more shares every payout, shares don't pay my mortgage, know what I mean? Now, this was a frequent point of feedback, I would say. And I tend to agree. They said, well, what's the point if you just have to reinvest your dividend? They said it seems shady. Well, some people said shady, but they said if you have to just reinvest your dividend, then what's the point? You can't ever touch it. So, and I understand where you're coming from to an extent. Here it is right here. These are for income, and yet the pullbacks seem to create greater losses than the distribution can keep pace with. It's it's a cat that can't seem to reach its own tail. You might have a good month like we did in November for many of these funds, but it's quickly lost by the pullbacks and then the loss always after distribution date. Well, yeah, that's because, that's the dividend discount concept, right? Yes, I am just getting to dump about 24,000 worth of TSMY. Big loss, even when considering the dividend. So far, seems like NVDY, Misty, SNOY, and FBY are my only single stock keepers. AMZY is next on my chopping block. I still have 5 feet. Biggie, LFGY, GPTY. Say that 5 times fast. It will be harder to figure out if I should keep these ones since not real easy to compare to other options or the underlying stock. Well, and that's the thing. I've been big on funds that are invested in the actual underlying, and Jay explained different nuances behind that. I highly recommend you watch the whole interview if you haven't already. He says, you're absolutely right. I am in pre-retirement, had to scale out of them for that reason. I was actively trading them for better results, still had to get out. If you're using it for growth, then you will have losses, of course. This is a good comment and a good commenter. If you are using it for income, then there aren't any losses. You buy more shares on the way down, keep your income coming in. People really have no clue what they invest in. Like I said, I highly recommend, and I say this to everybody, understand what you're investing in. It's literally for income, not growth. Buy the dips and you won't have losses. Yeah, but with some of these still, I mean, that's debatable. This person said going back to 229.24, Ulti annualized gains without reinvesting dividends is 0.52 or basically flat. Yeah, that's true. Considering inflation, it's like hey, a CD would do better in this case. Yes, yes, NAV is scary. I'm for cash flow. I never expect these to let me buy a yacht and a mansion, but they will cover some bills. Okay, let's see. I'd like to know the plan to get Coney's price back up when the underlying turns around. I have held Coney since August and it drops with the underlying, never fully recovers. They're basically just giving me my money back in these distributions. Starting to feel this is all an illusion and the fund managers just want the hype of a 100% yield to get suckers to pay in so that they can collect their management fees. I'm honestly hoping that is not the case, but looking at the results of my own portfolio seems to indicate that as being the case. What other funds are you in besides that? I mean, I get where you're coming from. I've seen it. He says, I agree with you. It's hype promoting yield 100%, but loses our original investment. We're in a trap by yield max management getting their 1% share. So I hope Jay and Company sees this. This is a lot of people feel this way in the retail investment community. And then he says, bro, you don't understand yield max at all. They are not designed to recover. They are paying out nearly all the gains. Coney won't recover because they will pay 90% of all the gains. At most, the price will stay flat and you'll get large monthly payments. It's not an illusion. You've not even been invested for a year. Go look at total return chart for Coney. You newer investors are all impatient. Now, I do agree. A lot of these do have a positive total return. Let's see. This person, I think, is asking for money or advice or something. Let's see what else here. I'm trying to get to the ones that say, hey, you didn't really press him on this or that. Let's look at some comments here real quick while we're at it. Okay, let's see. What do you think about the yield boost? Now, yield boost, it's interesting you bring that up because we're actually going to be having that guy on again, Will Rind of Granite Shares. And I told him, I couldn't wait. We thought this was going to launch back in September, but we finally have one. So we finally have the first fund for the yield boost out. So we're definitely going to be talking to him about that. By the way, welcome back. You're an OG. Good to see you back. So you're asking, what do you think about the TSYY 2.54 last declared dividend? I don't like individual funds, but I got their new index funds, TQQY and YSPY. Very interesting. So they got 3. So yeah, we're definitely going to be talking to him. I find these products highly interesting, and I'm going to give him the floor for a good solid 5 or 10 minutes and let him explain exactly how these work. So it's going to be very interesting. Okay, let's get to the next ones now. Back to the channel page. Let's see. MRNY is at $3. We have not reinvested. We have not reverse split. I hope that answers your question. Does that answer the question, Jay? Many of your customers are concerned about the decreasing stock price of most of your funds. To me, it doesn't sound like they care much. It's so concerning to me that his answer is to reinvest the dividends. Another thing I heard too that seemed kind of, I guess, out of touch. Um, he said, what was it? Oh, the job thing. He said, who out there um, doesn't have a job that's looking and like who that wants a job. Well, yeah, that's something that's been said probably for the last 3 years as a testament to the strength of the economy. But believe it or not, there are quite a lot of people out there in that boat, trying to find a job and not able to. So, and trust me, I know because I see it. So I should have maybe pushed back a little bit on that, but I kind of let that one go. But I'm not so sure. I'm not so sure about those jobs numbers. We don't have high unemployment, but we do have, there's a lot of people that are looking for work that can't find it, believe it or not. Let's see here. I had to look at the time of the upload when at the end Jay said, who wants a, oh, this is what we just touched on. It's a bloodbath in the federal workplace. Farmers aid grants are getting suspended. It's a little rough. Well, yeah, we've got a lot of cuts going on in the government, but we've got to somehow, cut spending and cut our debt and all that. It's just unsustainable long term. This person said, I own 100,000 shares of NVDY. NVIDIA will be in 2 conferences next week. New trade strikes are too tight. For the love of God, please pay attention to what your traders are doing. I think they do. This is the one I like here. Okay, I love comments that presume to correct me, but didn't actually pay attention to what I said. Okay, so SMCX, he said, does not pay a premium dividend. Know your funds before you go on air. Uh, to the contrary, sir or ma'am, uh, you didn't understand what I was saying. What I was talking about in context, if you go back and look, I'm talking about trading options against this. Talking specifically about selling puts against SMCX for premium. And because this one is a levered ETF, a Defiance levered ETF, it has quite a juicy premium, but it's dangerous. It swings a lot. So there we go. This is the time, bearish market. Let's see if these funds can survive this market. I guess we, the investors, are trapped in this crappy project. Yeah, we'll see. Ulti and the YMAX underlyings need to switch to weekly dividends to improve NAV chart visuals and thereby reduce selling pressure on these funds. I should have asked him too. I do wonder, like, what if a fund just keeps dropping and they don't reverse split? Then what? The only way out is losing a lot of money, he says. I'm trying to be retired in yield max funds, but finding that the NAV decay pulls the dividends down. Yeah, very common. Are these not designed to be a retirement vehicle? No, I would say not. They're not designed to live on, even though my channel is called Live on Dividends Now. I recommend doing that. Well, I don't give recommendations on this channel, but I actually, what I do, if I'm going to live on dividends, which I technically could, I'm projected to get enough income from dividends alone. But what I would do, I would have them from a lot of different sources, including some SVOL, some FEPI, some stocks like AT&T, Verizon, some more stable ones, some stocks also like Philip Morris, and some of the others that pay a consistently stable but reasonable dividend. Let's see. Total return still puts me down 35K in 16 months, so I'm not sure if Jay should choose that hill. What's the point of dividends if you just reinvest forever? So on my deathbed, I can brag about how many shares I have. That's the dang dumbest thing I've ever heard in 30 years investing. You want to be the coach, you've got to call out BS when you hear it. Hey, I get it. I get where you all are coming from, but I'd have to correct you a little bit. It's not that I want to be the coach. I am the coach. That's what I call myself. So therefore, I am the coach. And I did respond to these. If the erosion is tame, maybe 10 to 20%, but you keep 30%. But like 60% erosion in a year without market correction that year. Let's see here. The problem with most yield max investors is they fail at math. If you're down after 16 months, that's a you problem, not a yield max problem. I'm up 115% since February 2023. I'd like to talk to you one day, Terra Slayer, if you want to come on here. You sound like you really know your stuff. When I first got started in income investing, if you ever want to pop on the Discord, feel free. We can have a debate on this. What's the point of dividends if you reinvest forever? The point is to avoid that NAV erosion people keep crying about. Spend what you need, reinvest the rest. Yeah, but not everybody's making enough on here. And not everybody's a sophisticated investor. These are mostly retail investors. It's really that simple. Don't have unrealistic goals to spend 50 or 60%. If your capital is dropping, set a more realistic goal to like 20 or 25. Then we have a absolute lover here. No Tesla, he says. I don't like income ETFs. YieldMax is promoting their distribution company's return of capital, which the NAV depreciates. Yeah, return of capital, that's another thing that came up. So anyway, it looks like that was the bulk of comments we got. I actually thought there were a lot more, but only a few that were really, really super critical. So overall, it seems like the interview has been well received. Let's check and see if we've got any more comments here on the live stream. Oh, we have a sighting from Pay the Piper. He didn't answer what's the strategy difference between Ulti and LFGY other than the funds they trade. Ulti don't go up, but will LFGY? I thought he did answer. I did ask your question, and I thought that he did answer it. But I'd have to go back and watch what he said. Otherwise, I'm not sure. I will tell you, if you watch my recent video, I think I uncovered some red flags with the dividends for LFGY and GPTY. So go watch that. In fact, I'll show you my spreadsheet analysis here. The red flags I would say have to do with basically the performance of the underlying, which, as he says, they can't control. So What I saw in terms of red flags, I just don't see that this is going to be sustainable. So if we go here, if I go to this spreadsheet here, these are the trades we went over, by the way, that we pulled up. But the LFGY versus GPTY, look how much the share price has dropped. It's dropped from 50 to almost $40. That's a 10% drop. Or actually, that's a $10 drop. That's more like a 20% drop. Yeah, see 19.50%. So here's the thing. The dividends, we've only realized like 7.36% return. We're losing 20% of the share price. So that's a negative 12% total return, which is on pace if this continues to completely get wiped out. And the same thing with this one too. You see, I don't see how they can sustain when the share price drops this much. Because see what happens. You see, it's a pattern. Share price drops, dividends drop, and they keep dropping every week. Same here. Share price drops, dividends. Well, it rebounded a little bit that week, but basically, share price drops, dividends drop as well. So that's 10% decline there. So that's a negative 7%. So both of these are on pace to perform abysmally if the underlyings don't recover. But we've had a rough past week or so in the market. So that's hopefully that's an anomaly, if anything. He talked about the funds, but not the actual strategy. Yeah, we'll have to follow up on that one. Um, sorry, we didn't get a better answer on that. I've had a lot of pressing things. You probably saw I had to step away a couple times. So sorry I didn't do a better job following up on that one, but maybe I can ask him again because that is a very good question. Um, MSTR and Coin are 32% of LFGY. They tanked. Well, yeah, that's what I'm saying. I mean, the underlying, which they don't control, of course. Anyway, join sometime on Discord. Let's chop it up, as you say. I'd like to do a live show with the audience pretty soon. I'd like to go over some options trades and whatnot, and hopefully get an answer to that question. Anyway, that's going to do it for now. Thank you all so much for tuning in. Thank you all so much for supporting me by watching the Jay interview and my other videos. And thank you all so much for your continued support. It's always great. You all are the best part of this channel. Please remember to like, comment, and subscribe, and join Discord. And we will see you all in the next one. Take care. Good night. Bye.